All right, so starting right with the median price for Naples versus the state of Florida. Here's where my concerns about the bubble mainly come in. I've never seen a more bubbly shape than what I see here now. This is from 2010 to 2023, right up till October of 2023. And when we look at the numbers here, let's do October of 2010 to 23. So in 13 years, we've went from 160,000 up to 575,000. So a massive, almost around 400% increase. I believe the actual core inflation is more around 30%. The overheated market here, there's just no way I could foresee with all the other factors going into this, the high mortgage rates, the higher than ever income to housing expenditure ratios. There's just no way that this can keep going. So to say I'm betting the market's going to be improving for the next couple years is to say it can only go up. And at what point do we say, yeah, do we go on about 400% increase since 2010, but I think in another year or two, it'll be up to 500 or 600%. At some point, it just becomes madness. And by definition, part of what makes a bubble is nobody believes we're in a bubble. Here we can see the average from the last 3 years with a bar chart. So for Naples, 450,000 in October of 21, 555 in October of 22, and 575 in October of 2023. And you can see here 3.6% increase. When the market crashed back in 2006 to 2010, this is what we started seeing earlier, that it stopped booming and then it started getting a little more flat and then it started really going down. Here we're looking at the number of new listings. So here Naples is on the bottom and this is going towards supply. So the greater the supply, the higher risk for slowdown or shift towards a buyer's market. And over the last year, and actually let me bring this out a little bit to 5 years. And here, before things went nuts, we were in Naples looking at about 2,000 new listings. Let me just do year to year. So we're in October. Overall, Naples market had 1,500 here in October of this year, 1,200. So getting back to a more normal, maxing it out. October of 2010, 1,500 new listings. That was pretty slow time. It was a great time to be an investor. I was certainly grabbing up stuff back then. But right now, relatively similar numbers. As far as the market slowdown goes, what we're looking at right now is the total number of homes for sale. I went ahead and zoomed in just on the Naples market so we could better see the nuance in the chart. And here in October of 21, 1360. In fact, let me just switch out the bar charts. So this makes it a lot easier. We went from, so we had from 21, the total number of home sales. Remember, the higher the number of homes for sale, the more of a buyer's market it is. And so from 21, we had a 91% increase. And then right up to October of this year, another 30% increase. If this trend continues with more sellers going on the market and less buyers entering it, then that's obviously going to, the supply and demand equation there is going to lead to lower home prices in general. Here I'm showing the year over year sales for October. And here in 21, or sales from 2 years ago, we're looking at 877. Then they dropped 22% to 681. Then they drop 5 to 594, another 13%. Once again, just considering where we're heading, we're showing a trend of a substantial slowdown. We just looked at some numbers showing that the number of the supply is going up. And so if the supply is going up and the sales are going down, then the price correction will usually follow shortly behind it. Here we have more data on the slowdown. So once again, in 21, the average days on market was 24. It increased by 70%, 71% to 41 in 22. And now we're actually up to 56 days on market, which is up another 37%. So another indicator of a slowdown. Here we're looking at the month's supply of inventory for Naples. We had a 1 month supply in 21. It jumped by 180% to a 2.8 month supply in 22. And we jumped another 61%, 4.5 month supply of inventory. So the total amount of inventory, or the amount of time it would take to clear out all the inventory, up again. Another indicator of a slowdown. Now here's the median price per square. While the rest of the data we're looking at indicates the things are really slowing down, the price increase here is up 7% from 22. So prices increased 41% from 21 to 22 in October. And then from 22 to 23 in October, another 7%. So what we're seeing is, like I said, the price will lag behind the other indicators, because by the time the sellers and buyers in the market start to wise up to what's happening and react and then price accordingly, and for that data to then get entered into the system and reflect in real world sales, it'll lag behind. I would be very surprised if we managed to go up by another 2 or 3% by this time next year. I would not be surprised if we're down by 10 or 15% this time next year. These big shifts in the market are not at all uncommon. When the market was going crazy in 21, if we have since gone from 228 to 343, or we went from 321 to 343 in a year, then who's to say it can't go down to below 300 next year? There's certainly a very good possibility that could happen. Here we have another indicator of a slowdown. This is the total dollar volume moving through the Naples market over the last 3 years. We went from 668 million to 640 million. So drop of 4%. This year, we dropped another 15%. Another indicator of a slowdown and another indicator of a trend downwards.